All right, we all know it. Interest rates hit 7%. So now what?
No! God, please, no! No! No!
What do we do now? This is just crazy. Okay, housing has gotten way too out of control as far as affordability. Now interest rates are 7%. Oh my God, why is this happening? Well, if you've seen my prior videos and if you watch the news, the feds are trying to combat inflation. Inflation is still hovering around 8.5%. And because of that, the feds keep raising interest rates with the hopes that it's going to bring inflation back down. So we're going to see these high rates, higher mortgage rates for a little while longer until inflation comes back down. When is that going to happen? Nobody knows. Sorry. I wish I had a crystal ball, but I don't, and I can't predict. So let's talk about some ways that we can help bring those payments down now. There are some options for you. If you still need to buy a home, don't fret over it. There are some things that you can consider as far as different types of mortgages. I also just recently learned of a new trick this week from a fellow real estate agent and also from a mortgage lender where you can ask the seller to help pay for your discount points towards your mortgage. Stick around. This is some good stuff. So not all hope is lost. Now, the first thing I want to throw out there is if you can afford the higher monthly payment, you want to consider a 15-year fixed rate loan. I know some people panic over that. I know when we were buying our house, my husband was like, let's do 15-year loan. I'm like, no, I don't want to have that high of a mortgage payment, but hear me out. And I kind of regret this too. You're paying the loan off much sooner, saving thousands on interest, right? Plus, the 15-year fixed rate loans have a slightly lower interest rate than the 30-year. I say definitely do that if you can swing those payments. Now, another loan I want to mention, I've talked about this before, and some people freak out when this word is even mentioned. I'm talking about the ARM loans or adjustable rate mortgages. I know people freak out and they say, oh my God, this is what did everybody in back in 2008. Hear me out. It's not the worst thing in the world, but I will tell you, you have to be careful with these loans if you choose this route. Now, with an adjustable rate mortgage, interest rates are lower and you're locking in on that interest rate for a period of time. So for example, you can do a 5-1 ARM loan. So meaning that you'll have that lower rate for 5 years. And then at the end of the 5-year period, it's going to adjust to whatever the current interest rate is. And it will adjust again every year after that. So you have to be careful. If you do choose to go with this type of a loan, there's a 5-1 ARM loan. There's a 7-1 ARM, and there's even a 10-1 ARM. If you chose to go with one of these loans, you have to stay on top of it and watch the interest rates. So if you see the rates come back lower than what you're currently paying, you got to get on the ball and refinance. Because if you don't refinance that loan, or if you don't sell that house before that period is up, man, you're going to get slapped with a really high monthly payment. So that's the risk you're taking with these adjustable rate mortgages, but they are an option. Now, I just want to point out to you, just speak with your mortgage broker, with your bank, whoever's going to be doing your mortgage for you. Talk to that person about these different options, whether it be you want to do a 15-year loan or if you want to do a 5-1 or a 10-1 ARM. See what your options are and always look at the worst case scenario, meaning that if you go with an ARM loan, what will your monthly payment go up to? Say you don't refinance and at the end of the 5 years, your payments are going to go up. It's going to adjust to the new rate. Look at the worst case scenario and see if that's something that you think you'll be able to afford. But again, talk to your brokers, talk to your banks, get all the information from them. I am not a mortgage broker, I'm a real estate agent, but I'm just sharing with you just this basic knowledge. So get the details from a lender. Another option is you can buy discount points. This could get expensive. So if you bought, like, say, 1 or 2 points, that could bring the interest rate down to a more reasonable number where your monthly payment is lower, but you're going to be laying out some money up front. And 1 point is typically 1 month of your mortgage payment. So if your mortgage payment is, say, like $3,000, expect to pay $3,000 in addition to pay for 1 point, or $6,000 for 2 points. So that is an option if you have that money up front to pay for it. A lot of people don't like doing that. But with the way things are right now, it might be worth it to throw some extra money at it to buy down your points. If you like today's content, you got to hit the like button for me. I would appreciate that so much. And while you're at it, just subscribe. This is a good channel. I think you're going to like what you see here. So subscribe. Now, I didn't forget about that little creative financing trick that I learned about this week.
That is so cool.
Okay, so this is kind of interesting, and stay with me here, okay? Follow along with this story. This came from my lender friend, whose name is Bob. Bob services a lot of my clients' loans. He sent this email to me this week. A great example of a good negotiation tactic that a seller can do for a buyer. And besides Bob, I heard this from another real estate agent, a friend of mine, who had mentioned this very same thing. I thought this is kind of genius. So follow along, stay with me here. So it says here, Mr. Seller is asking $670,000 for his house. Miss Buyer wants to buy Mr. Seller's house, but doesn't want to pay full price. She wants to offer $640,000, which is approximately 5% lower than the list price. Miss Buyer will end up with a mortgage with 25% down payment, a mortgage of $480,000. And at today's rate of 6.875% and 0 points, her monthly payment will be $3,153. And that's not including taxes and homeowners insurance. So it's going to be even more than that. So she's offering $640,000, but Mr. Seller offers to pay for 3 points of Miss Buyer's mortgage and offering that as a seller concession, but keep the sales price at $670,000. Stay with me here. Miss Buyer is going to end up with a mortgage with 25% down payment. Her mortgage will now be $500,000 at today's rate, using those 3 points that Mr. Seller is offering to pay for. Now her interest rate goes down to 6% and her monthly payment lowers to $3,012 a month. So this is a savings of $140 a month to Miss Buyer. And for Mr. Seller, he's actually netting $655,000, higher than the $640,000 that Miss Buyer was going to offer him. Now he's paying for the 3 points of $15,000, so that's why he's netting $655,000. Now, even though Miss Buyer is paying more for the house, the lower rate again gets her that $140 a month savings, and her total savings for the year is $1,686. This is freaking genius. This is genius.
That was awesome.
I mean, isn't that kind of crazy though? She's paying more, right? She's paying more for the house, yet the interest rate is lower, and she's saving more money that way rather than paying $640,000 with the higher interest rate. It's just insanity, but it's a win-win for everybody, right? The seller's going to get a better price, okay? And the buyer is going to get a lower mortgage payment. So that's, I mean, it's brilliant. It's such a brilliant idea. This is something I think sellers should think about. If someone makes an offer on their house, you can turn around and say, hey, I don't want to reduce the price of my house, but I'll pay for a couple of points to, get your monthly payment lower. I think this is just genius. I so appreciate my friends telling me about this. It's something to think about. Look, we're all in this whole crazy economy, right? We're all in this together. And I think we all want to help each other, right? And especially with the housing market the way it is, I don't know. I just think this is such a great idea. So do me a favor, if you're going to go buy a house and you use this tactic, let me know. Or if you're selling a house and you offer this to a buyer, do me a favor, drop a comment below. Let me know how that worked out for you. I'm so curious. I'm really going to suggest this to people that I'm working with. Like, why not? Let's ask for it and see what happens. I just think it's brilliant. So along with those other options, there are creative ways you can get around this with lowering that interest rate. And yeah, so listen, like I said, not all hope is lost. So hang in there. It's going to be okay. And if you liked what you learned today about all of this, and if you want to learn more about navigating this crazy housing market, you can check out these videos over here. I think you'll really like it. And yeah, check it out. Let me know what you think. Thank you so much for watching me today. I am Jackie Baker, and I'm with Coldwell Banker Realty, and I will see you next time.